Today's video is all about PropChain, blockchain ecosystem for real-world assets and prop tech solutions. Today we're going to be doing a deep dive into this project, figuring out whether we should be scaling in. Here at the bottom of the range, preparing for this bull run, we're going to look at the value proposition, tokenomics, all the fundamentals, including the team and the ecosystem itself. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it. If you're new to the channel, special welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. Whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if at the end of the day, doing deep dives is what it takes, guys, we're here to do that. Today's video is all about PropChain. PropC is definitely a project that many individuals have been talking about in the last little while. It's a very small, market cap project, which means that there's a good potential to the upside. However, guys, we have to understand that with small market caps, we could get some volatility even to the downside. But what's really good about doing fundamentals is at least you understand the value proposition and the strength behind the project and the tech itself. So that's what we're going to do here today. We're going to use the actual website to actually guide our research, to give us an indication about all the details, and at the same time we could definitely do a bit of a critique on the website itself if it does a good job giving us the information we need. Okay, so we're going to use the website as a platform to guide our research, and at the end of the day we're going to go through all the little details here throughout this video. All right, guys, let's continue. Let's go see what's going on here with blockchain ecosystem for real world assets. Guys, let's number one talk about the narrative here. The real world asset narrative, RWA, is really up and coming, right? Lots of hot topic right now. Definitely lots of good alternatives within the same ecosystem, within the same value proposition, or at the end of the day, competitors to PropChain. And that's something that we got to consider when you're in a new let's say narrative, right? There's going to be a lot of individuals, or in this case teams or projects, trying to reach for that market cap. So it's right now, I think this is the narrative that could be really hot for the up and coming bull run. This is why it's important to basically get in at the bottom of the range, get in when things are being talked about, when there's a bit of hype, when you see it stirring and brewing. This is when you want to kind of give it a bit of attention, and this is why I'm doing a deep dive on this project today. But nonetheless, the real world asset narrative is definitely a hot narrative. The overall total market cap of this narrative is very small, and I would say that there's no real let's put it this way, market leaders at the current moment. I think all the competitors right now in the space are fighting for the top tier, first mover advantage, right? So there are others, within the space, but they're not huge and they don't have any real advantage just yet as a first mover. So PropChain definitely has the capability of reaching that status level. Okay, so let's continue here. PropC is the ticker. They have product users over 700, so it's not that big. Let's be real, 700 is nothing to really be proud of in the reality of things, but for such a small project, 700 is good. So it's all relative to its size, right? We're talking about a $10.5 million market cap. It's small, let's put it that way. It is bigger, it's more than that. This hasn't been updated for a bit, so we'll take a look at those tokenomics and those metrics in a second. 2.5 plus, so 2,500 holders, so individuals holding the token itself, which is good. Now down here, these are just places where they have been mentioned or basically collaborated with. Maybe no partnerships happening right here, but nonetheless, this is good. Some exposure for the general public on Bloomberg, Yahoo Finance. These are all both paid and potentially unpaid outlets of information, so that's good. So why PropChain? Obviously, you could do your research, you could read all of this in great detail, but I'm going to kind of summarize it for you, okay? The reality is that it's in a real world asset narrative, which means that we're trying to tokenize, okay? The narrative is trying to tokenize assets, tangible assets, commodities, right? And in this case, we're focusing on real estate. And they actually take it one step further, right? One step further is understanding that there's a big issue in the current real estate market, which is basically individuals being priced priced out of the investment of real estate. So just consider real estate as an investment, not necessarily your primary home as a necessity. You got to move that aside, because at the end of the day, PropChain is not that solution. It's not going to give you a home to live in. However, it will give you a property to invest in if you are priced out of the market. So we got to understand that. Okay, so the opportunity here is fractionalization of the assets. In this case, fractionalization of the real estate market, or a home, or a property, or a building, or whatever the case is. The real world asset is, it's the fractionalization of this asset that makes this value proposition of PropChain very, very interesting, and the liquidity that it could raise for individuals to get into the real estate market. This is also very important based on its value proposition. So what we got to really understand is, let's pretend that you're priced out of the market and you're not able to get into real estate, but you want to invest in real estate. Well, they're able to fractionalize the real estate investment into multiple parts, and each part will be tokenized. In this case, think about it as a Bitcoin. You have one solid Bitcoin, and let's say you want to buy a portion of a Bitcoin. You can buy Satoshis. Now let's use the same analogy. You have a building, you want to buy the building, but you can't afford the whole building, or in this case, you can't afford even the whole suite or apartment, or whatever the case is. You're going to buy a fraction of the apartment that is fractionalized based on tokenization, and a portion of that home or that asset will definitely be allocated to the tokens. So you can buy pieces of it or own shares of the asset, which is pretty interesting, right? That's basically the main value proposition here. Okay, so let's continue. So it's just basically unlocking new avenues of accessibility, security, and growth in the real estate market, right? So from bricks to bytes, leading the RWA prop tech, the property tech blockchain revolution. A lot of good stuff here. What I did realize, based on the reading of a lot of the language here, it's not really that clear for newcomers to the space. I'm criticizing the website along the way. The website is great. The first website, we'll talk about the second website. And of course, you guys know that I don't like when a project has two websites, and I'm going to have to give that the critique as well. But the website, the language behind the website, the reading, the communication behind the website is not at a level for a mass adoption. You have to know a little bit of what's going on here to really understand. Now, that could be their strategy. They want serious, blockchain, investors, people that know what they're talking about. But for mass adoption, they got to get something which is a little bit more clear here. So I'm not going to get into this because I've kind of summarized it already. Pioneering in-house solution for fostering collaborative innovation. Look at the language here. It's a lot of fluffy language and sensationalized language, very much so. Look at the image. It's very sensationalized. It's pretty cool. It's a very interesting tech that they're trying to bring to the mainstream society, but the language is very sensationalized. Okay, so I like straight to the point. When you see this type of language, and even these 3 points, they mean nothing. The reality, they're just fuzzy feeling type of points. So moving on. The ecosystem, blockchain powered foundation, amplifying value creation. Even that sentence right there, very, very fluffy. RWA prop tech layer, and then there's the venture capital growth, layer coming from second half, or the first half of 2024, first half of 2024. Both of these ideas, or these, let's say, ecosystem projects will definitely be released soon. We'll see what happens there. But a decentralized network aiming to streamline real estate process, reduce friction. Okay. Pretty fine. Prop tech innovation. We provide resources for high potential prop tech startups to amplify sustainable. A lot of, again, very coming soon. Let's see what they come up with regards to that. Now, their current products, there's not many. Let's be real here. There's this dashboard that they got going on. It's an application that you can click, and let's see if I can open it up in a new tab. You can click and you can stake and so on. It's a very basic DeFi type of thing where you can stake your assets and earn passively, I'm assuming. So verify I'm human. Let's see if this works quickly. If not, we'll let it. Oh, not bad. Okay, so you can see that you can have your portfolio, you can stake, and that's it. There's nothing much happening here. And if you go to the PropChain app, let's see what happens here. Open it up in a new tab. You go to prop.com, which, guys, is the second website, which kind of bothers me. You guys know that I don't like two websites, and it takes a bit long to load, and I already have it preloaded on this tab and sign in. This is the thing with having, this is the other website. We'll talk about the other website in a second. Sorry if I'm confusing you guys, but this is part of the game. When you have two websites, it does get confusing. So let's go back to the original one, which is PropChain.com, not prop.com. Okay, so that's an important thing to think about, is because I believe that this website's major initiative is to just talk about the chain, right? The actual blockchain as an innovation, PROPC. Now, the prop.com is the application that is built on PropChain. I get the difference, I do, but sometimes there's a bit of overlap that causes confusion. Which data are we using as most current, and why is there so much overlap, right? So we gotta have two distinct websites that are very different, so that as we do research, we don't get confused and start doubting our research. Anyways, prop.com, download the white paper. Guys, I just want to say one thing. When you go to prop.com, depending on your geographic location, I don't even know what the restriction is, but I get basically a block from my firewall, from my antivirus, saying that there's an issue here, both downloading the white paper and visiting the website. Guys, that's a problematic thing. Of course, it's friction. You don't want to have to put a VPN on. This is what I had to do, is put a VPN on to get access to the website, so I can get into I think it's my geographic location, based on that I wasn't able to get on based on my location. So wherever you are, if you do get that virus type of scenario, you put a VPN on, and then you should, or blocked website or something like that, you should be able to get access with a VPN. I got on, I don't have any viruses. Other people that I've spoken to in the community has gotten onto the website as well and downloaded the white paper. So we should be clean in the clear, but the company needs to kind of figure out what's going on here, because you don't want this type of image. Even if it's based on geographics, it's still a portion of individuals that are basically left out of at least doing some research, right? So that's something to consider. Now, if we continue going down, we have home ownership accelerator. Found the home you want. Accelerate your home ownership dreams. Find, finance, and secure your dream home. Coming soon. So you can see that there's not even much utility just yet. And it's understood because it's very new. Remember, it's a very small market cap project. I think it's, if I'm not mistaken, I will look at the tokenomics, but it's very small, under $20 million, I believe. So institutional grade asset tokenization, an institutional grade compliant infrastructure for large-scale tokenization of wide variety of securities. So this is all great, but it's all coming soon. And the only thing that we have right now is this prop.com and the application for prop.com. Okay, so in order to really know what prop.com is, we have to go on the prop.com website. But before we do that, roadmap is nice and clean, clear, concise. Historical events, all check mark. If we go to 2023, we're in the second half. We're definitely looking at 2023 H2, and we're looking at different things that could be happening. Public launch of the platform, prop.com, that's already done. Institutionalized tokenization. All these things are definitely along their way, and the H1 of 2021, first half of 2024, is all these other potential scenarios. Home accelerator, institutional tokenization, a lot of good stuff here for PropChain, testnet deployment. All these tier 1 exchange listings. I wonder what those are talking about, what those are, what kind of exchanges, because right now it's not available on many. And yeah, that's one of the issues with regards to liquidity. If you want to have a very liquid token, you got to have access to volume. And if there's no exchange, you're going to rely on Uniswap or, very small exchanges. It becomes very hard to get in and out of the market when you want to, basically access your value or your currencies in this case. Okay, so pretty good. I like this. Very clear, straight to the point, accountability within a decent range, year by year, half a year, which is good. Quarterly is not necessary in this case, this is what they did by half years at a time. Pretty good. Okay, let's move on. What else do we have here? What are users saying? Guys, I don't like this. This looks really tchotchke. Let me define what I mean by that. It looks like some sort of, look at the images here. I don't know if these are real people, if they're just actors, or if they just got them on like a website image, and this doesn't look very, very trustworthy, honestly. So I'm gonna move on from that. But nonetheless, pretty good. They got socials. Unfortunately, they do not have Discord or Telegram, which is they do have Telegram, but they don't have Discord. And if you go on the other website, you'll see what I mean. There's lack of socials a little bit. Okay, so Let's click the Telegram and see what we get here. PropChain, and it doesn't take you anywhere. See, this is one of the things. It doesn't really take you anywhere. So a lot of the links that I've noticed kind of do that. When you click the link, it takes you in a redundant loop, which that means that, you know, maybe there isn't a Telegram. So we really need to kind of like iron this out with regards to the website. And again, if you want to download the white papers, I already have it downloaded, so we'll take a look at that in a second. Digital board terms, a lot of resources here. Privacy, terms and condition, PROPC.com, the DApp, the home accelerator, and the asset tokenization, which is yet to come. Okay, so we're flying through this. Pretty good website, not too bad. A few little issues, but we gotta, you know, kind of iron those out. Now, if we go to, this is the PropChain, it takes you down here. Ecosystem takes you all the way down here, and there's not much of an ecosystem just yet. Token doesn't take you anywhere, and then community takes you all the way down here, which again is not much value there whatsoever. Okay, so let's move on. This is a good start for the website. Let's take a look at prop.com. Let's see what's going on here. This is the second website. Again, the design is great. I actually like the design better than the first one, but this is prop.com for this application itself. So it's an application that you can download for your mobile phone, right? So digital invest in the world-class property in just a few minutes. Co-own prime Dubai real estate. Right, so this is the thing, you can co-own. This is basically the fractionalization of real estate. See this little this big mansion right here, you can't afford it all. That's fine. They'll fractionalize it, they'll make shares out of it and tokenize those shares, and you can buy the shares. Now, one of the main issues here that many are going to probably think about is, you know, regulation and how can we stay within the framework of the law. And this is obviously one of the major concerns, not only for real world asset narrative, but for the crypto in general. So we want to kind of see what they have going on here. And investors can get a piece of the real estate pie. This is one of the things that they want to, you know, as a value proposition. It's more than easy to get involved. Of course, you download an app, sign up on the app, get yourself verified, full KYC, all of the type of things, all of the know your customer requirements are there, guys. There's not going to be any anonymity here whatsoever. Okay, so this is something you have to understand. In order to comply with, you know, these types of tokenizations of assets, of, you know, you're going to have to fully KYC. Euro 20 million euro property portfolio, so give investors access to world-class real estate. 500 plus active investors, join the wait list. Okay, PropC, zero upfront cost, done for you. Choose what, okay, you can read prime property on your own. Okay, good stuff, makes sense. An approved platform, trust the experts. So this is where things kind of like, you want to get a little bit of confidence here. Exactly. Allowing our users to invest with confidence. Self-custody, very important. And it also offers self-custody with a not so self-custody, let's say, an easier way for somebody to back up your keys just in case something were to happen, so you don't lose your shares of the property. So that's a good thing to look into, because they both have fully self-custody and not so fully self-custody, which are good options for those individuals that are not maybe so tech savvy. Obviously, do your research there. And yeah, you know, Baltic plays key role in our platform by managing legal framework. So there's some legality here. They've done their research to be fully compliant, and that's very important, right? And we know that Dubai in general is very progressive. You know, Dubai property in prime Dubai property get easy monthly return payouts, see your investments grow and property value climb. And this is all based in Dubai. So at the end of the day, we know that, you know, that part of the world right now is adopting, and they're full on, and, you know, there's a good chance that, you know, from a legal perspective, they're going to have clarity and adopt and allow a lot of this to kind of, you know, operate. So that's a good thing. Okay, really good thing. Again, look at these faces. They look like actors. They're not very clear, and that they're actual investor of prop.com. You know, this should be removed unless they get actual faces and actual people in there, which even still nowadays, it's hard to prove. Look at that. Doesn't look really good. Doesn't look professional whatsoever. Qualify now, get ready, passive. You get the point. So back to the bottom, why prop.com, the strategy, the team. Let's click the team. Let's see if they got anything. And they don't have anything real here, guys. Okay, so they just got some statistics. There's 27 members, funded 5 million plus euros funded, 500 plus active investors. Okay, fine. Our, you know, guiding principles and cultural foundation, extremely honest, guys. It's, you know, fine. Of course, they're going to tell you, they're going to be honest. Transparency and complete ownership. Okay, innovation, a lot of good things here for compliance and, you know, again, you know, the legal frameworks and all of that. That's it, guys. Unfortunately, on the website itself, on both websites, there's nothing with regards to the team. Okay, but if you scroll down and you go here and you can see they have a LinkedIn. Okay, let's see what happens when we click that. We go on the LinkedIn, we see what's going on here. We can see that prop.com, and if you go to there's nothing posted. If you go to people, okay, there's nothing here, you know, LinkedIn member, nothing. But if you go to the PropChain on the on the side where it says pages people also viewed, you go to PropChain. Let me get rid of this thing, and then all of a sudden you get maybe a little bit more, and you start seeing the actual PropChain LinkedIn, and you go to people, and then you get some info, right? You're getting the developers, the main people, the founders, which is good. We have Robin, which is the main guy here, guys. He has some videos on YouTube, you know, basically working with Bybit. I have a feeling they're going to get listed with Bybit any moment now, so that could be good to see some volume, but nonetheless he has some good speeches out there and interviews and things like that, so go check it out. But the only two individuals that you can get information on are the founders, these two guys here, right? And they're both on the same team, and if you look at their background, where they're at, they're involved in a lot, guys, in a lot, and they're full-time in all of them, which doesn't make any logical sense. You can't be full-time in many different companies, right? So it's about, you know, spreading your resources, your human capital amongst all these different ventures that they got going on. So again, I've said this in the past, when you see a lot on a person's plate, you start to question how much effort are they actually putting into PropChain. I'm not saying that they're not putting effort, or if it's their, you know, side project or it's their hobby. I'm not saying that, but what I am saying is this is something to be concerned with, given the fact that there is no other information with regards to these other members. They're not fully doxed completely. You can't click on, let's see if I click on one of these, community manager, student, I don't know what that is, chief compliance. Let's see, you can't click on them, you can't get any info, right? So who knows who these are? They could be real, they could be fake. I'm just saying, just be critical. The only two individuals you can actually get information from are these dudes right here, and these are the main guys that you want to, you know, have, or the face of the company anyway. Okay, so this is important. Do your research, dig around a little bit more. You can see their where are they from? I think their University of Amsterdam, if I'm not mistaken. But regardless, let's move on. Okay, pretty good stuff there. We have, let's see, the prop.com, back to prop.com. What else do we have here? The strategy. Again, these are all like their ideas. Why Dubai? You know, it's up and coming growth, and they focus on Dubai because of that. The economy is doing very well. Boosting process, refurbish the main, we reduce the cost. So that's the thing. They're trying to filter out all the noise and the nonsense out of real estate so they can reduce the cost out of the transacting and being part of the real estate community. You know, in that case, you know, the fees and all of that are very, very high depending on where you live in the world. Dubai is one of the world's most desirable spots for long-term foreign business investment. So that's why they chose Dubai. How do you boost your commercial rental revenue? Of course, office spaces. A lot of good talk and details with regards to Dubai. And that's about it. The company, again, more information here without, yeah, and then there's a very little, you know, we talked about this fractionalization. We did this one already. The blog, nothing there as of now. We're still working on it. No worries. They'll come back later. They're still young. They're still working, doing their thing, which is good. And why prop? Let's see what else we got here. Start your journey is not even a big, well, it's not bad. We got some info, but again, invest in real estate, fractionalization. That's what they talk about here. Dubai properties. We're changing real estate for the better. Own your growing asset, easier than ever. Okay, this is the thing. A lot of repetition, a lot of same thing. Not really much more than what the other website had, but a lot of duplication, a lot of, you know, it makes things ambiguous when there's, you know, saying the same things in different words, and then you start doubting yourself. But nonetheless, pretty good so far. Okay, let's take a look at the white paper real quick. Okay, let's see what's going on here. Good design, really in tune with what the website is offering. The first few pages of this white paper talks about their mission, the challenges, which is important because we always talk about here on the channel that you have to find a problem and then find the solution. If you can find the solution to the problem, that is when you basically can guarantee some success. High financial entry barrier makes real estate investment inaccessible. this is something that globally, for the most part, we're dealing with. Operational bottlenecks, of course, complexities, red tape, bureaucracy, all of that stuff causes friction. Illiquid markets hinder the investors, of course. Lack of diversification in other assets. Because of the end of the day, we're looking for a home. You basically clog up all your capital in your primary home. And then what? You can't go buy another home. But if you can buy a fraction of a home or a few shares of a home, that gives you at least access to property and as an investment, not as another home dwelling. You get what I mean? So that's not bad. Unfavorable loan terms, of course, in traditional finance, we know that those interest rates are through the roof. They're trying to help that and provide the liquidity for all of that. So a lot of good value propositions here. Market potential, of course, we've seen Larry Fink and many other heavyweights in the traditional markets talk about this tokenization. So that's a good hot narrative, real world asset narrative. Of course, we've talked about that. Products and solutions, we talked about this. PropC.com, prop.com, we went through it already. The business model, this is where they're going to make revenue. If you're looking at it from a business perspective, this is their model. Entry fee, so when you list, you basically have to pay. So it won't be billed during checkout to provide user with a free perception. Yeah. So at the end of the day, based on raised amount. So what you can actually sell, I guess, meaning it's added to the property value. So I really want a little bit more clarity there, but basically this entry fee is added to the property value. Yearly admin fee. So again, there's some sort of yearly administrative fee that they're going to collect. An exit fee, I guess, when you delist or sold or exited outside of the platform. Exit window fee. So if you exit your property or you basically delist your property outside the window of basically the restraints or within the contract, then maybe you're going to have to pay a fee, very similar to a mortgage. If you basically exit your mortgage early, you're going to have to pay the fee at the end of the day. So this is exit their assets before the official exit event on their platform. That's basically what number 4 is. So more details obviously would be nice, but it basically makes sense. Business account fees, arrangement fee, lots of little fees here and there. Very typical of a bank, let's say, or an institution. They got to find ways to raise capital, which is important. Client-based platforms, self-custodial. These are the product pillars. Blockchain as a tech stack. Liquidity windows. These are all things that they offer in ways that you could earn. These are the pillars of their thing, which of course I would definitely read and get a little bit more details about. Key features for investors, investments, automation, self-custody banking. Very, very repetitive stuff here, guys. We've already talked about this. And for businesses, again, being able to list their assets here is nice and convenient through an application, through a dashboard, very clear. And a lot of this needs to be, ironed out, and more of their laterals are going to have to be definitely coming soon. Definitely coming soon. Product flow, investor, KYC, like I said, lots of that stuff happening. Legal and compliant documentation is required as an investor. So keep that in mind. Product, web and mobile platform, self-custody wallets, banks, and so on. Okay, so this is all in the smart contract layer or prior to the blockchain layer. Then you have in the real estate or owner and developer legal structure. There's got to be a legal capacity in the background, trying to basically protecting the legality of your investments or even of the business itself. Business platform, the web, and tokenization structure, of course. Okay, so this is the thing, legal framework. Get into it a little bit more detail, guys. I'm not going to do that here on the deep dive, but they do put a lot of efforts here to give you that sense of, peace of mind of how they went through the legalities of things. So definitely do that. They make a compelling case that they are fully compliant and there's nothing to worry about. Okay, so tokenization, I'm not a lawyer or anything like that, so I'm not going to get into too much of that detail, but I definitely would consider doing a little bit more research if you do have any doubts. So let's move on. All right, so the ERC, it's an ERC 1155 contract. So it's an Ethereum-based contract, which is, of course, something that we have to understand that when you're talking about Ethereum, there's a level of gas fee, but they have their own chain. So we got to see exactly, is it a layer 2? Are they going to reduce the gas fees? How does that work exactly? We're going to have to look at the technicals. All right. So the contracts enables the issuance of fungible tokens, of course, ERC 20s, 1155s. mechanisms adhere to strictly in our platform. Okay, cool stuff. Read into that. You can see the technological stack. You want to get into the whole aspect behind the tech. It's all here. A lot of good information here. I will definitely do a little bit more research on that, on the technology. So we're going to kind of scooch through and give it a quick run through here. Tier and loyalty programs. This is where the utility of the token. This is more important, I guess, if you want to do a quick overview of what really you're getting into and how you're going to, you know, see the token have value, because you're looking for the value proposition. At the end of the day, it's a loyalty program. That's the biggest one. You're going to get rewarded. That's it. Prop.com is committed to serving and rewarding its most loyal users. You use the platform, you get rewarded in multiple ways, okay? Number two, cash flow buyback. So balancing, so this is important. So basically they go and buy tokens off the open market. And in this case, they're going to, you know, practice not only solidifies the token demand, but they're going to start, there's a burning mechanism, a dynamic burning mechanism that makes this deflationary, which for me makes another level of utility. So business accounts, extending its services to professionals of the real estate sector. So again, businesses, real estate businesses can get in and use this for listing and for listing fees and other associated fees with regards to the business accounts. Liquidity windows. This is something that they got going on here. So recognizing the necessity of liquidity in real estate asset trading, prop.com introduces distinct liquidity windows. While users can exchange their assets anytime, there's windows basically where you can basically get unlocked and get special trading windows where, you know, the fees are not as or the velocity and broadening of the opportunity spectrum. So basically it's about fees and matching yourself with that window and unlocking special trading windows. That's all it is. You know, it's just a window that gives you access to your liquidity without friction. Pretty interesting, I guess. I guess more details here has to come around and giving us some real world application here, but that's all you could really get at this point, right? The project is very, very new, so we got to understand we're gonna have to take all of this as is basis. So milestones, we talked about them, pretty good and trusted by. These are not partnerships. These are just, you know, relationships they have to increase the confidence of the investor based on, you know, self custody, Ernst & Young, Elliptic, all these companies here that have basically been working with PROPC. Pretty good overall. White paper, not bad. Good stuff here. Okay, guys, let's talk about metrics. Let's look at the metrics here for a second. We'll use CoinGecko. I know there might be a bit of a difference between CoinGecko and CoinMarketCap, but for simplicity, we'll keep it here with CoinGecko. It is trading right now at about $1.87, $1.88, fluctuating within that range. It is a small market cap. Right now, it's at about $14 million market cap, depending on where you look. I think CoinMarketCap is at about 14 million, which doesn't really matter. At the end of the day, it's a very small market cap. Circulating supply is at about 7.1 million units, which is very, very little circulating supply in comparison to the total max supply out of 100 million units. That, guys, there's only a small percentage of the tokens in circulation. So if you're concerned about how, you know, this the remaining tokens can hit the market and basically dilute the value, it's there. Obviously, it's there. There's a vesting period that kind of slows down the amount of tokens that hit the market. So we're going to talk about the vesting period right now. Let's see if I got that going right here. This is their vesting period, their whole schematic on how the tokens are going to get released. So the PropC token, it's an ERC20, which is the tokenization, like a non-fungible token, total supply, fine, hard cap, seed round. This is what private sale, strategic funding, public, you know, a lot of little basically metrics here. This is what interests me or interests us the most. You can see that starts 4 months after the listing, 19 months daily interval. So 19 months, it's going to take about 20 months before, in this case, to see the seed in the private round basically fulfill their obligations with these tokens, about 7 million each in both the seed and the private. Okay, so something to understand that in this case, it's not really a fair launch type of thing where, you know, tokens are already in distribution and type of thing. There, you know, people that are gotten in early, both the seed, the private, maybe the treasury, maybe the team, you know, all these in the, you know, basically these tokens add up, and you know, they're not all in circulation. Like I said, only 7 million units are in circulation, so there's not much to really worry about. Now, this was released a few months back in September, so since then we do have more tokens in circulation based on this vesting period. Okay, so DBM, dynamic burning mechanism, there is a burning mechanism that makes this basically deflationary, which is a lot of the people that look for good tokens, they look for deflationary aspects, right? How we're going to reduce supply over time so that it eventually, you know, those tokens that remain on the market basically go up in value via, you know, supply and demand or supply shortages. Based on the increase in demand, we can see the price go up, right? That's something that, you know, basic economics teaches us. Strategic. Okay, so I guess for strategic investing, public, for the general public, this is where the majority of us fit in. You can see it's 50% of the tokens at Genesis, 50% were issued or allocated for the public. Okay, so that's a good portion. But if you start adding up, you know, with the rest of 1%, and 50% to the public was already issued out of this small amount, you know, it's not the most. The devs took 15 million. Right now, none of them has been issued at Genesis. Advisors, nothing. Community, nothing. Rewards. But you remember, this is a bit older, so we're getting a bit of emissions in the last few months, right? So after it starts in 4 months, starts in 2 months, you get what I mean? So we've been getting a few emissions on these ones that are starting a month after, 2 months after, 3 months after. Okay, so something to consider is that some of these have already been issued through emissions, through the vesting. Okay, so this is the schedule, and they've already had some emissions. So pretty good, not bad. Like at the end of the day, you can see that, you know, the team at the end of the day it's not like they're taking so much, but it is still there. The team, the advisors, you know, between those two, you're looking at about 20 million tokens. And then what else do you have? Liquidity, the treasury, another, because I kind of couple these all in. Who's basically behind the treasury? Who's behind the team? Who's behind the advisors? These are all very centralized assets. Okay, in this case, these tokens are very centralized. They're in the grasp of the team and the advisors, which could all be in one and commingled. So for me, it's a bit of an issue, but I'm not. This is the name of the game when you're looking at a new project like this with a distribution that has not been distributed yet. So let's keep that in mind. Nonetheless, we're still okay here. Let's go back to CoinGecko. Let's see what's going on here. Again, 100 million in supply, nothing there. Fully diluted, it's a baby. This thing's only worth $165 million. Very young. We're very early. Let's take a look at Etherscan quick. And let's take a look at the overall token holder distribution. See what's going on there to see that we can have a nice even distribution. It's taking a bit longer to load than expected. Holders. And let's do one of these, the token chart, and let's see. You can see this one right here is holding about 15%, 12%, 10%, and then you got a few. So you got a lot here at the top, a few percentages, but they're not bad. You know, I would say like maybe the top 7, the top 6, top 7, you're holding on average about 10% each wallet, which is a bit, that's, you know, that's a significant amount, using about $10 million each type of thing. So these wallets at the end of the day are going to have to distribute these tokens to the market eventually, you know, through the contracts, right? So just understand we're still early. Okay, nothing, you know, nothing really crazy here, but nonetheless, you know, when a bunch of the major wallets, the top wallets, hold the majority of the tokens, that's obviously concerning to individuals, right? Anything can happen in this case. So keep it in mind. It's a young project. Tokens have yet to be in circulation. We only have 7%, give or take, in circulation, okay? The rest of them are held into wallets in cold storage on the, you know, basically held within the contract, okay? So that's something that we got to keep an eye on. What else do we got here? That's it. We're doing pretty good. We'll talk about price action in a second. Yeah, not bad. Real world asset narrative. I really do like that. The market cap is low, guys. Really, really, really low. Okay, so you guys know that I release those deep dive infographic charts. Guys are going to post this on the Discord. I'll put it on the socials. So if you want to get a copy for yourself and take a look, it's definitely going to be there. So at the end of the day, let's look at this. We talked about the tokenomics already. It's very small. The supply right now is only 7.5%, give or take, of the overall, token supply. It's very, very small. So we're talking about a project that it's in its infancy, and of course it's very clear that its market cap is going to be very low, and its fully diluted is very low. So we got to understand we're in early, guys. If this thing runs based on a hot narrative, this could be a great gainer, right? What I don't like is the volume right now. The trading volume is only 800k. We're talking about very small percentage of the trading volume. I like to see at least trading volume of about 10%, 15% is nice, but 10% at minimum I like to see right around that area, because that shows me that there's liquidity, people are buying and selling, and if I wanted to sell my tokens, I could sell them very easily. When there's no trading volume, it gives me a sense that there's going to be a friction when I want to sell. Now, if you look at the fact is that there's not many exchanges listing this right now. Uniswap and BitGet, very small exchange. Uniswap obviously is Uniswap, a DEX that has low liquidity for the most part. And then we talk about potential future exchanges. Potentially Bybit is along the way. Okay, so if that's the case, we'll increase the liquidity, we'll increase some volume. We should see a little bit of a pop in the price if that gets happening. But at the end of the day, does Bybit have the strength to increase the volume significantly? I don't know. We need some top tier, bigger exchanges to get this thing going with more volume. So right now, that's my only concern, but still pretty good. This is what you have to deal with when you're talking about microcap altcoins. Okay, let's go take a look at the ecosystem. The ecosystem, of course, right now it's 10 out of 10. The reason why I gave it 10 out of 10 is because its application, what it has going for it, is directly basically it's based on its value proposition. There's no fluff. They have an app that is ready to go for listing real estate. That's what they came out here talking about. That's what their value proposition, that's their bread and butter, and that's what they got going. So no real necessity to have more onto their ecosystem, but there's definitely potential for future applications. Okay, so far so good. As long as their further applications or further further use case does not flop, they should still remain very high in their 10 out of 10 ecosystem. Although it's very small, it's really good. It's doing its thing as to what it wants to achieve. That's what I look at. It doesn't matter how many, it's about this is the objective being met, and so far it is definitely being met. Okay, let's talk about utility. Utility right now, it's fairly typical. Fees, you have your tiers and your loyalty programs, your cash flow buybacks, your burning mechanism, your business accounts that can basically pay their fees and rewards and all of that, liquidity windows, a mechanism that allows people to delist and list, basically delist within a window of time that gives them privileges and all this kind of stuff. So for me, that's a pretty cool, pretty interesting, and very clear and functional for the application at hand here, which is the real estate market. So 10 out of 10 for utility. Good stuff there. The roadmap, one of the best roadmaps that I've seen so far. Very clear, concise, accountability is there. They know when they're doing it, and it doesn't have to be precise to the day or even to the week or the month, but they gave at least to say, look, in the first half of this year we want to achieve this, and they keep themselves accountable by keeping their history there for all the way back. I think it's from 2020 or 2020, something like that, a few years back. Anyways, they have lots of good a repertoire of milestones that were already hit. So for me, that's a bonus. The team was good. It's solid. At the end of the day, we saw that the team had a good basis in the real estate market. You can look at the fact that the website didn't have much about the team, but you had to do a bit of digging in order to find out who was behind it, which we were able to get onto LinkedIn with a few clicks, get that happening. I would love to give it 10 out of 10. All it really needed is a clear introduction to the team on the website. and we needed the lead developers of the technology listed and fully doxed, okay, because that's very important as well. Who wrote the contract? Why is the so we can see what kind of talent we have behind the tech, not just the real estate. This is not only a real estate play, okay, we're talking about tokenization and who is tokenizing, who created the mechanism and then in engineering behind the tokenization, and we don't know who that is and where they came from. So I would, in fact, I think it was a bit generous even with the 9, but nonetheless pretty good. Okay, not bad. What else do we have here? The socials, unfortunately, the socials, they got a few followers on X. It's about 56K. Not bad. In fact, it's pretty good considering it's its market cap. What I don't like is the fact is that they lost about 1,000 followers in the last 30 days. Okay, even despite they're up, they're up from the previous 30 days, they're still up, but they lost 1,000, which means they lost more in the previous month, which bothers me. Okay, so what does that mean? A lot of the times this happens, this fluctuation of followers in such amounts, it's because either the followers were bought or manipulated, right? And they get totally, delisted, or things happen when you get those fluctuations. I really don't like that. Fluctuations of 1,000 followers at once on Twitter, on X, bothers me. Okay, I don't know about you guys, but it bothers me. And only 11 posts for the last 30 days, and it's up 10%. So the reality is, the last 30 days, what did they do? Another 10. Guys, they need to really get going with their socials. They need to have a little bit of transparency. I like the fact they have 56K. In fact, I think I was even a little bit generous here with the 8. They don't have a Discord, and their Telegram is not functional, and it takes you into a cyclical type of thing. So I gave it 8 out of 10, and at least they have a presence. At least they're there on the socials, and they have 56,000 followers, and they're still going at this during a bear market. So throughout the bear market, they were still pumping. So good stuff, but still areas for improvement. Tokenomics distribution is typical, not a fair launch necessarily. They still have their vesting period. The team gets their cut, and so on and so forth. They got, at launch, at Genesis, they released some tokens and so on, so at a discounted rate and so on and so forth. So not really fair launch happening there. It is deflationary, which is good. Not many tokens in circulation, which means that we run the risk of seeing the token price putting pressure on the price by, dilution. That's the thing. But if the vesting period is nice and slow and demand keeps high, we could definitely absorb the tokens and keep the price propping up to higher levels, even though more tokens are going to be entering in circulation. Okay, no partnerships listed. If there are, they should have made it clear. I dug throughout the website. Nothing is necessary. Nothing is clear there with partnerships. Okay, and strategic partnerships is what I'm looking for. One thing we have to understand as well is some teams don't want partners. Okay, it's not necessary. They're good, right? But it is good for a new project like this one to have some strategic partners that can help them basically get to the next level or improve their tech by working together. So I'm not sure I'm not sure when or where, but at the end of the day, there's nothing happening there. Okay, so I give them a 0 out of 10, but it's not going to impact their overall rating because maybe it is a strategy of theirs not to have any partners, and it's viable, definitely viable. The exchanges, at the end of the day, you can look at this as an opportunity or as a weakness. The weakness is, as I said, there's no liquidity here, very little liquidity. No, Bitget is very small. Uniswap has no liquidity. Bybit is up and coming potentially, is very likely, and at the end of the day, if you want to get in and out of the markets, there's nothing really there to offer you that volume. So 3 out of 10. But if we start getting listed on KuCoin, obviously the Bybit, KuCoin, Bybit, of course, and let's say maybe even Binance, maybe Coinbase, who knows what, this thing is going to run. Right? It's going to run. So the reality is it's about allocating the right amount of capital, the right position size according to your risk profile. And that way, if it runs, great. And if it doesn't, you're not overexposed to actually, risk too much. You don't want to bet the farm here. But nonetheless, it is pretty good right now. Let's talk about my overall verdict. It's part of the hottest narrative right now, in my opinion. A lot of people talking about this RWA, real world asset narrative, tokenizing and basically enabling fractional ownership of real world assets. So the fractionalization is the key competency here, where they are basically splitting up a property into many fractions and allowing individuals to buy those fractions through tokenization, which gives individuals access to the real estate market, whereas they weren't able to before, because they would have to buy the whole property. Right now they can buy a fraction of the property. Website is and the white paper is blocked. Okay, so both the website and the white paper is blocked depending on your geographic location. Guys, for me, that's a little bit iffy. The two website causes confusion. It does. I never liked when there's two websites without clear direction. It leads me to believe which one is the one that we should be focusing on. So more focus, clear direction is best. Socials could basically use some attention, no Discord or Telegram, and you know, the follower count and all of that, basically losing so many here and there bothers me. Deflationary, really good dynamic burning mechanism. Token distribution and vesting is not listed on the site or a white paper, so I had to find that on Twitter, and even that on Twitter, it should be a working document. It should be something that we can get in high resolution, maybe some graphs, some charts, and some clarity. That would be really good, right? So that for me is a problem. I want all the I want everything clear on a website or on a white paper. Okay, so personally speaking, I like when companies make the white papers very technical, a lot more detail, and their website basically picks it apart and displays it in a nice graphical way for the mainstream society. The website should be a brochure for mainstream adoption. That's what basically the website should be. And if you want to get very technical with more detail, download the white paper. Guys, they got to get this going properly and package this up better. So there's vesting for the treasury, liquidity rewards, community, advisors, team, public, strategic, and for the burning and the private and you know, and the seed round, and all of this is all within vesting. There is a schedule where you're going to see these tokens being emitted to the market. So this is good. At the end of the day, that's very typical of a project. Private and seed sale, however, have already had some tokens released, and there has been already tokens being emitted since September, since that chart was released. So we're getting a little bit of emissions as we speak, which is good. Now for the evaluations, guys, the evaluations are difficult. Guys, I've covered real world asset projects in the past, and those are the hardest ones, because at the end of the day, we don't have much data to go by, because real world assets, the narrative in itself, the category of in itself, it's so new that what benchmark do you really have? All you can really talk about is the general market in this case. If I would use, let's say, the leading real world asset project out there, I wouldn't have a large market cap to deal with it. And I don't even think those ones reached their peak, because they're also new. They're also babies in comparison to what the real market, the actual crypto market has to offer. So we start looking at the reality of the market in general. We're talking about, let's say right now in this bottomish phase that we are in, okay, if we see a $1 billion market cap altcoin, it's pretty matured, right? It's pretty matured. If we look at a $500 million market cap altcoin, we look at one that did very well, perhaps already, or is in a good phase, has matured slightly, and has done really good gains for those individuals that got in at the bottom, where it was, let's say, $20 million market cap. And this is where we're at. So let's say, from a hypothetical perspective, this project at under 20 million gets up to 500 million, which is a decent altcoin that have already done pretty good with a nice impulsive move. You're looking at about $67 PROPC token, which is at about 36x. That's very modest, right? Because we're evaluating these altcoins, this $500 million market cap, of basically looking at an overall total market cap of slightly over $1 trillion. So this is the thing here, guys. Slightly over $1 trillion is not even near the previous bull run total market cap. So we got to understand that even if it reached 500 million, we did decently here. We're looking at about 36x. And if we reach the 1 billion, let's say it's a first mover, it does really well, it pumps really hard, the overall crypto space goes really hard, and it goes to about, let's say, a $5 trillion market cap total what do you think PropC could do? It could probably get to $1 billion market cap. And if that were to be the case, you're looking at about a 71x, $135. Now, let's be modest, right? Of course, we want to be modest. You don't want to be greedy. If we get anywhere within this range, guys, you're doing very well. You're looking at about $100 target. If we get to a nice psychological level of 100, I definitely will start getting defensive on those gains. Okay, obviously, as a momentum trader myself, I look for indications that momentum has got exhausted. Right now, there's no clear indication. We're at the bottom. We're accumulating somewhat still on some of these altcoins. I believe maybe we might get into a corrective measure very, very soon where we can be able to scale into some of these altcoins at lower prices. But right now, we are definitely looking for a bull run type of a shot. And if PropC does well in this bull run, which I don't see why not, a target of $100 is very possible. All right, guys, let's take a look at the price action, guys. I know you want to talk about charts. I know you're here to talk about charts. PropC at the end of the day has been doing very well. It did run up, and you can see this price action the way it is. It's indicative of a small market cap project where you see a lot of wicks and quick spikes to the upside on and off. But we got to look at this in a little bit more detail. Let's do that right now. You can see that we did retrace. We came down. We made a slightly higher low, which is very, very nice. And this was the accumulation range. This is where I was like, okay, we can't catch a bottom, so let's start DCAing. One here. These are great zones. Then we take off. Nice W formation, double bottom, bullish divergence. Let's fly through the resistance. A local top totally got destroyed, and then higher levels. These were the TP zones, just based on blind TP. Momentum rise, we did come up to overbought conditions on the daily, and then all of a sudden got a retracement. Do we get down to this retracement phase and go for another leg up? The reason why taking profits here is not bad of an idea is because you can basically take profits somewhere around the zone, and let's say your average TP is at about $2, and then you can have some capital to say, look, let me just take a break and analyze structure. What is being built here on the structure? We have some lows right here. Okay, and then we can probably go on the weekly to see if we can consolidate this a little bit. This red candle here doesn't look good, I'll be honest, on the weekly, but still we're not overbought on the weekly, which we've seen some altcoins already get overbought on the weekly. And then we start looking at patterns, right? If you go on the 4 hour, it's kind of see if we can find. This looks like a complex head and shoulder formation, and I'll show you what I mean. We have a shoulder right here, a head, and a potential shoulder right here. Now, there might be a few little shoulders here on the left, a few little shoulders here on the right, and that's why I called it complex. It's not perfect, but it's still head and shoulders formation. Then we got, the neckline, the area that we got to kind of watch out for, which is quite confluent with this trend right here. So if we start breaking below this and we start coming down below to this zone right here, we have a bit of an empty spot here to watch out for. It's not too clear, obviously, but the next area of support for me is at about $1.50. And that's where, I would consider saying, you know what, we came down for a bit of a dip and I'm interested. So let me put something here to kind of put that very clear. Let's kind of go on the daily again and we'll kind of see what's going on. Yeah, these are all good zones to watch out for. Definitely. I'm going to reuse this because I had a doubt we're going to get down there again. It could be possible, but we're going to have to, let me leave it there and just add one here. Look, in the short term, based on what's happening here, if we came down to this zone, broke through this volume gap, and you can see that this horizontal that I put in here does show us a bit of weakness right into this area. You can see the volume profile. There's a few spikes of supply and demand here that could act as support at the 0.23 Fibonacci level. But nonetheless, this area right here is a bit of a weak spot. Straight down, pretty much straight up, straight down, no price action here, straight up. So not much of a consolidation anywhere around this area, which caused this to basically to present a bit of a weak zone. If we do break down, that's the area to watch out for. Okay, so, and of course, the top of the volume gap and the bottom of the volume gap are all very important zones. Now, the reason why taking profit there is okay is because this can consolidate for the next little while, and in the meantime, you're taking risk off the table, and you might say, look, if we get back down to these wicks bucks again, I might want to say, look, I'll get those profits, I'll put it in right here, and I'll put a stop loss right underneath, very, very tight. Why? Because if we start breaking these levels, it's likely that we start coming down to $1.40. And if we come down to $1.42, you'll have capital, even if you lost a little bit on a bit of a trade with that stop loss, but the majority of it has already been covered given the fact that you took profits all the way up here. And that range right there doesn't look big, but let's say your average exit was right around this area. Let's put it right here, okay? And you can come down and buy it right around this. You're looking at about 15 to 20% discount, okay, which is not bad of a discount if you can get these profits, maybe taking 10% at a time, 10% here, 10% here, 10% here, or right now maybe taking a little bit. Let's see what happens. And it might not be a bad idea, but then people are going to be looking like, this looks like a bull flag, right? Where we got an impulsive move, we're going to consolidate and continue to the upside. All is very possible. But the risk that you're taking here is the fact that could we be getting in a corrective move here on Bitcoin? If Bitcoin decides to roll over in the short term and come down for a little bit of a breather, maybe come down to as low as 25K, maybe even 20K for all we know, that would still be bullish, right? It's still a higher low from a macro perspective. But nonetheless, if that were to happen, altcoins will come down and you'll see PROPC come down. So this is why I'm saying sometimes taking a bit of risk off the table and getting in again at a bottom of a range with a tight stop loss means that if it pops and continues going up, great. But if it doesn't, at least you have your tight stop loss in there. You've already taken profits and you're just sacrificing a bit of those profits for potential another impulsive move, another leg to the upside, which we've seen a lot of altcoins do already, break previous highs and get into extension levels. Extension levels, we're talking about the 1.27, which is right around here at $3.40 more or less, and then the 1.618 extension, which is at about $4. Nice psychological round number right there at about $4. That's where I would see this thing going. But again, it's all about risk. Do we finally roll over and come back down, or is this the opportunity to scale into this structure at the bottom of the range, take profits on the tops, and basically scale in at the bottom and put that stop loss, right? If you're sitting on the sidelines and you want to get in, I would be accumulating at the bottom of this range and at bottom of this range. But look at the daily. At the end of the day, you got to be convicted that the overbought condition is done. Right? This didn't get so overbought. You got to admit, we've seen other altcoins get severely overbought. This is not severely overbought. This scenario is not really overbought. It's less than this one. And now are we getting a scenario where every time we come down and go bullish, do we get smaller and smaller and lower, basically creating a trend where the overbought conditions are getting exhausted, showing that maybe it's done. Maybe that's the case, right? So we got only 2 touches here so far. Do we come back up and make like some sort of cup and handle here on momentum? It's possible, and then break and get to a nice overbought conditions and get this thing higher. We've seen bearish divergences and all these type of lower highs on the RSI get invalidated. There's no real clear bearish divergence here. Higher highs on the price action. There is, in fact, on the daily on these 2 tops, 1 and 2 higher highs here. Let me show you what I mean. Higher highs right here. Okay, and this is how you're getting that head and shoulders. This is the follow. This is the back. This is the confirmation high. The lower high. This is not good. This is how head and shoulders formations are built, right? This is a higher high in the price action with bearish divergence. This is the lower high after the high, the bearish divergence as the follow through. Confirmation high, a lower high, and now we're gonna potentially come down and test that neckline. If we break below the neckline, this thing's going to get oversold, and if it gets oversold, we're testing the lower levels. This is textbook. This is exactly how head and shoulders are formed, and the ones that actually break down because of the divergence and because of the follow through and the confirmation. The bears are loving this confirmation. Why? Because it made a lower low, a lower high. Sorry, a lower high is a potential change of character, because we didn't make a higher high. We in fact made a lower low, and if we make a lower low here, guys, that's it. Lower highs and lower lows, and the trend is your friend, and we're coming down. Okay, so be careful here with PropC. If you happen to get in here at the bottom of the range, the time to take a bit of risk off the table is up here. And I'm not saying exit your entire positions because it could run up even further, but you never know. It's a game of probability, guys. Nobody knows what happens in the future. Nobody has those crystal balls, but we can definitely use probability and statistical analysis to protect your gains. All right, guys, thank you for stopping by. If you haven't yet, do the channel a huge favor and slap the like button. It does really help out with the algorithm. And of course, if you want to follow me on the socials, the links are in the description below. feel free to join that Discord. The Discord is a great community, lots of good alpha, trade setups, fundamentals, learning material, and all that good stuff. Guys, join me live tonight at 7:30 Eastern, where I'm taking requests. If you have any projects you want me to cover, that's a great time and place to make those requests, and I'll put them in top priority. Take care, guys. Have a good one, and don't forget, buy the dip.